Good morning, everyone. Happy Monday. Happy new month. Happy potential bear market bottom. And I'm excited to talk to you today, go over the charts, and eventually hop in the room. Obviously, late today. I had a little maintenance thing over the weekend, so apologies for that. But such is apartment life. So, in any case, let's get going on these charts here. So I'll keep it quick. It's all really necessary today, short and sweet, and we'll talk about the major spots we're looking at. So obviously, the major spot is this weekly SMA. You can't see it on this chart because it's a daily chart. I just don't overlay anything onto here from the weekly, um, but it's right about here. So if we were to draw a zone, that weekly SMA zone is right about from, let's say, 35.75 to about 605. So a major level like this is not, uh, it's usually not to the tick bounce. Last night it was actually about 4 points away from to the tick bounce, so pretty close. But in any case, I'm watching this zone. So this is going to be that important weekly SMA zone, 35.75 to 36.05. You can see just on the daily here, if we look at this candle. It's another one of those tremendously bullish candles, especially if it closes like this. It's got that piercing pattern look, and on top of that, it has it's engulfing the day before. So especially if we keep initiating higher and higher, we make a higher high than yesterday. That's going to be an uber bullish candle. As it stands, in my opinion, it's already pretty darn bullish. But we've seen those candles get reversed several times during the bear market. Here, this one's pretty bullish as well. But this one in particular, it's got that piercing look, it's got that bullish engulfing look, and so until this level fails, I'm assuming that the dips are going to be bought. Just keep in mind, just for perspective, around these weekly 200-week moving averages. I said this in the newsletter. I'm going to just read it word for word here as well. The 200-week SMA is a pivotal bear market magnet. It is either held as the low or led to the primary sell leg of every major 15+% correction since the 1980s. So this level is huge. This zone, huge. And I think that that's really going to inform our trading going forward, especially for the next week. Obviously, it breaks, and we're going to have to reevaluate things. We're going to have to probably expect a more sustained sell leg. But until it does, I think or I should say, I'm in buy the dip mode, and I'm going to keep those beta weighted deltas tentatively long, and hopeful that perhaps we get a sustained run at least into this supply area, recharge this RSI a little bit, and then we can look to short them once again. So that's the major macro look. I think the next stop is going to be, if we just look on our intraday charts here, is going to be this supply zone that we built out all last week. So I'm going to highlight this as well. So this zone here, I think that's our next major battle, we'll say, for the bulls. And I think that this 3,700 naked POC, that's what this dotted line is. I think that's going to be the magnet. So we get into that, we really start moving up out of this zone and make a higher high. Then we're going to start cleaning this stuff up. And probably go test that really 38.20. So about this naked POC here, 38.10 area. I would expect that to be near the top end of this bounce. Obviously, unless they do put in the bottom, so that's always the potential. But the key levels I'm watching are the demand below. So I'm going to draw it in this chart just because I want to really emphasize how important that's going to be. So let's draw it from. I will just use this as value area. Actually, it's a pretty good proxy. So I think that's by the dip in here until that breaks. Remember, time and volume. Below it is when we'll kind of look for that break, but until then, it's buy the dip here. I will look to potentially sell up in here. I don't think the bulls are going to get off quite that easy, although they might. But really, the next major area for selling is going to be like this naked POC and any type of sell in this area. We get through this area. Uh, at least for me, I'm going to kind of sit on my hands for about 100 points or so, maybe look around that 37.80. But really, they get through this, they break that high. I think this 38.10 area at least is inevitable. So intraday again, you'll see on the document, I do so far have some shorts just at the monies, just based on that Rule 16 expected move. But in terms of out of the monies around here, so again, you'll see this in the document, but the major zone for the major pivot zone, in my opinion, on the charts for SPX is about this 3650 to 3660 area. Just keep in mind this is ES, so levels are slightly different. But this pivot zone here, as long as we're above it, above that 3650 on SPX, and definitely above that 3660, I'm expecting continuation toward that magnet of 3700. So intraday, I always like those Rule of 16 trades, it's just mechanical. I always like those false break trades, it's just mechanical. But we want to keep in mind that if price holds above the pivot, the bulls are going to want to go target that 3700 area again, and we'll just want to be careful with any shorts around there. We start to fill this again. Okay, well, as we're speaking here, value just moved up, so that's nice. As we start to fail this, perhaps we can look to get those out of the money shorts, but we definitely want to be careful. We're still in squeeze zone, as we saw in that macro chart. RSI is still oversold, so it's probably a good time to be patient, pick your trades, and carry a little bit of long delta. It's one of those risk reward things. Yes, this area might break, but if it doesn't, I'm going to be carrying that long delta because the upside potential relative to the downside risk is quite extreme. So if we're looking at volatility here, as always, our major little reference point there, this trend line is held. It's now become resistance. It's held quite a few times, and we're just stuck back in this range. Remember, this is our primary, the top of our primary channel there. So VIX is still uptrending above this. If we do pop into here, I think that's when we start to really chop around, and we look for continuation lower and lower. As soon as we get it below this one here, that's when I think so just going back to what we're talking about, that sustained move to 3810-ish. If we start to see VIX break below here, I think that's when we can start to look for that move. Until then, still above the channel, still just kind of chopping around. We need to respect those pivot levels, respect the supply zones, and not just expect everything to be over yet. Like I said, I'm tentatively long, going to remain tentatively long, but no hero stuff. And hey, we can just enjoy the two-sided action. Hopefully, it looks like that's what we're going to get. Hopefully, not too much of those days like last week where we consolidate in the same range. That was a pretty brutal consolidation, but I think we can look forward to some good trading this week and hopefully this month as well. So I'm going to come join you guys in the room. That's all for today, and I'll see you soon.